Now, elsewhere, research from Index Ventures shows a growing share of European startups looking across the Atlantic, with 64% now expanding to the U.S. at pre-seed or seed stage, I should say, up from just 33% between 2015 and 2019. So some interesting numbers there. Let's digest them with our next guest. He is Martin Migno, partner at Index Ventures and author of Winning in the U.S., the founder's guide to building a global company out of Europe. And Arjun, of course, is also joining the conversation. Good morning to both of you. Thank you for joining me. I feel now that I have a little bit more company around the desk. I'll start with the conversation, Martin. I just would like to understand some of the dynamics here, because the title of your book is Winning in the U.S., but this at a time when a lot of European governments are actually trying to keep companies on this continent. Walk us through some of the dynamics that you've witnessed.
Yeah, that's what this book is really about, is that, contrary to a lot of the noise out there and the fragmentation, we see that European founders are becoming more and more international earlier in the journey. As you said, 64% by seed or pre-seed stage had a presence in the US, whether it's a co-founder, an employee, or headquarter. And we want to encourage that, and that's what this book is about. So this book is about, we studied 500 VC-backed startups from Europe, and we surveyed 140 of them, and we then interviewed more than 40 of the top entrepreneurs and operators in Europe. So people like Daniel Ek from Spotify, Ilkka Paninen from Supercell, Nikolai Storonsky from Revolut. And we put this book together to share the learnings from those companies who have been there before and continue to encourage European founders to think global from day one, be born global instead of becoming global.
But I'm wondering how they can think global, because the regulation is not the same. So what have you heard, what have you noticed in terms of how companies are trying to make it both on the European continent and in America when they have to deal with different authorities and different regulatory landscapes?
Yeah, so one of the findings from this book is that there is not one playbook. We reduced it and simplified it to 5 different archetypes of how companies become global and especially expand to the US. And it can go from companies that go all the way to transplanting to the US and starting in the US, so the Collison brothers or Datadog or Duolingo, where you have European founders who start European companies but in the US from day one, all the way from companies that can operate on a global basis from one location. You can think of gaming companies like Supercell, like King, like Voodoo in France. And a lot of that depends on 2 things: how much of your revenue is going to be global, and especially coming from the US, and what is your go-to-market? Are you mostly marketing-led or mostly sales-led? If you're marketing-led, like a gaming company, you can operate globally from one central location. If you're sales-led, you're selling to enterprise software customers, then you have to be you have to have presence on the ground, and especially in the US, you will end up having more and more of your team being based there.
Martin, in this big age of AI we're in right now as well, how are you seeing European companies approach this? When you look at the tech stack in AI, it's so heavily dominated on the infrastructure layer by American companies, the hyperscalers, the chip companies. Where do you see the European companies having a potential market here and impact?
Yeah, I mean, we've seen European companies at every level of the stack. Obviously, we're early investors in Mistral. There are a bunch of infrastructure companies as well. And then at the application layer, you see some really big successes, Lovable, being one of the most visible one in the kind of vibe coding space. And so we see European companies being successful. And again, if you look at these companies, they've been global, from day one. And if you hear, Arthur from Mistral will tell you he doesn't want to be a French company, a sovereign French company. He wants to be a global company and compete on the global market. You look at, 11 Labs and Lovable, like those companies have been from the get-go, they've thought global, they've been thinking global, they've been built global, and a lot of their traction is coming from the US and the rest of the world as well.
And what about valuations as well? At this point in time, we've seen some absolutely mammoth seed and Series A funding right now for some of these AI companies. You play in many different parts of that investment layer as well. How are valuations in the tech space as it stands? Are some of those big valuations of seeing at early stage filtering through to other parts of the investment stack?
Yeah, certainly, valuations are elevated in that space, but I think what we're also seeing is unprecedented growth and potential in the market. So, we looked at how quickly companies grow from 0 to 1,000 employees, and we found out that AI-first companies are actually growing faster than even the previous generation. It takes them about 4 years to get to 1,000 employees versus 5 years for the successful ones. And you can see some of the traction of some of these companies adding hundreds of millions, if not billions of ARR on a quarterly basis, which was totally unheard of in previous generation. So I think what we see and a lot of investors are banking on is that the pace of growth is going to accelerate, and so in a shorter time frame, you will start seeing hundreds of billions, if not trillions of dollars of value being created and captured by the private market and venture capital in particular.
Martin, there was a recent story that really caught my attention because I think it speaks to some of the areas where many people see the need for improvements in the European tech space, and that was around the Revolut CEO. There was a story around his pay package. He would get paid a certain amount if the valuation of the company went to a certain level as well. There's been big criticisms about incentives for founders and CEOs here in Europe, particularly for startups as well. Are we starting to see a change with this kind of pay package on the table now? Because it's very unusual for European tech company to have that kind of situation.
Yeah, I think Revolut is definitely a unique company. The performance of the company is kind of defying gravity in many ways, and there aren't many companies like that in Europe. It may end up becoming, who knows, maybe one of the largest kind of European tech companies. I think it is fair to reward performance, to reward exceptional performance, which was what Revolut is having. I think Revolut, to your point about the regulatory landscape, I think Revolut is a really interesting example of that, where it shows what Europe can build when it has a unified regulatory landscape. The reason why Revolut has been so successful is they've been able to take advantage of the financial passporting model, where you can have one license, in their case they started in Lithuania, across the European Union, and cover and launch in every single European market with that one license. And so, and then ended up becoming a better company and a better fintech than most of the competitors even in the US. I think it shows when you have a unified European market, Europe is totally able to build global leaders on their category.
That goes exactly to my next point. I'm trying to understand whether you have seen concrete evidence of the flow in the other direction, because there's another element we haven't discussed here, which is that Europe offers, for the time being at least, more political stability than in the United States. Is that attracting companies, like Revolut and others, actually, to do more on the European continent and have American companies seeking to have more presence here too?
Yeah, absolutely. A lot of these companies are not totally. In the previous generation, a lot of these companies would what we call transplant. So they would start even in the US and go after Europe later. What we're seeing now is companies being truly transatlantic from day one and really thinking on a global basis and kind of ignoring borders in some ways. You can say that entrepreneurs are kind of the next generation internationalists in a world where everyone is, and politicians in particular, are talking about borders and sovereignty. Entrepreneurs are not really thinking like that, and that's what we're seeing in this book and in the surveys that we're doing, and I think that's the right thing to do. I think they should. Right. There is a massive opportunity globally. If you're not going forward, then somebody else will, and we see the other way around as well. As you mentioned, we see OpenAI opening offices here, and we see US companies opening offices in Europe. Europe has a massive advantage, which is very high quality of talent at a much lower price, and that's obviously very attractive, both for US companies, but it's also a massive advantage for European tech companies that can build in Europe and sell in the US, which I think is a winning formula.
It's about being agile, isn't it, in a very complex world. Thank you so much for joining us today.
Thank you.
Martin Mignot, partner at Index Ventures and author of Winning in the US, The Founder's Guide to Building a Global Company Out of Europe, and of course, our very own Arjun Karpal. Thank you both.